One of the common doubts that majority of the trader keeps getting is what is the ideal risk to reward ratio for your trading. Some traders might tell you to aim at least 1:5 risk to reward ratio to become profitable, and some other traders might tell you to aim 1:3 risk to reward ratio. Or some other people will tell you that 1:1.5 or even 1:2 is a decent risk to reward ratio. So you might be wondering which is the best risk to reward ratio for your trading, right? So before diving into that part, let's understand what is risk to reward ratio and why it is important for you as a trader. So in simple words, the risk to reward ratio is the potential loss that you are willing to accept for each trade or the potential profit you aim to achieve. So the risk to reward are often expressed in ratios. For example, it could be 1:2 risk to reward ratio or 1:3 or 1:5. So let's understand what is 1:2 risk to reward ratio. So 1:2 risk to reward ratio basically means that you're willing to risk 1000 rupees in order to make 2000 rupees profit. And why is it important? So you might be wondering, why is risk to reward ratio important? And one of the first reason is it helps you to manage your risk. It ensures that you do not lose too much in just one single trade, even if you have some losing streaks. It just doesn't help you manage your risk, it also helps you define your strategy. So it is going to guide you for your potential entry, it's also going to help you for your potential exit levels as well. And mainly it also helps you identify high probability trading setups. So you still might be wondering, what is the ideal risk to reward ratio for your trading, right? And the answer is, it depends on the several factors. There is no single line answer for this particular question. It depends on the market scenarios, it depends on your trading strategy, and it also depends on different market conditions. So if your trading style is aggressive, then you may aim for the higher risk to reward ratio, which could be 1:5 or 1:6. But if you are a conservative trader, then you might prefer the lower risk to reward ratio, which is 1:1.5 or 1:2. And as I told you, it also depends on the market condition. If the market is too volatile, then you might aim for the lower risk to reward ratio, and if the market is stable, then you may aim for the higher risk to reward ratio. And the third and the most important thing is, it depends on your personal risk tolerance, which basically means that how much are you comfortable losing on a single trade. So if you're okay losing 1000 rupees in order to make 2000 rupees, then that could be a decent risk to reward ratio for you. But you risking 20,000 in order to make 20,000 rupees is not a decent risk to reward ratio, and it may not be a personal risk tolerance. So if your risk to reward strategy is telling to risk 20,000 in order to make 40,000, but personally if you can't afford 20,000 loss, then that's not a good risk to reward ratio for you, and you need to replan your risk to reward ratio again according to your personal risk tolerance. So if you're a beginner, then the best thing for you to do is to trying to capture a lower risk to reward ratio, aiming for a lower risk to reward ratio at your early stage. Instead of trying to capture 1:3, 1:5 at your early stage, first try to capture 1:2. So as you can see, this could be a 1:2. So this is your 1:2. So first try to capture this momentum, and when you're confident, then you can aim for 1:3, and after you're confident on the 1:3 as well, then you can go for 1:4, 1:5 risk to reward ratio. At the early stage, just do not hop on to the high risk to reward ratio. At your early stage, try capturing the low risk to reward ratio, and when you're confident, switch your risk to reward ratios. So after this, track your progress, monitor your win rate, average profit and your average loss to see what works best for you. And mainly for you as a trader, I would say focus on the profitability rather than focusing or chasing the high risk to reward ratios. The fourth key and the last thing I would like to tell you is, risk management is the key regardless of choosing any risk to reward ratio. So if you're not able to manage your risk, then it doesn't make sense learning all these things and not being able to control or manage your risk.